Good morning, hello and welcome to Money Control's live stream. You're tuned into a fresh new edition of Opening Bell with me, Lovisha Darad. Well, we are into the second day of the trading week and looks like we are headed for a muted start after the 2 day of back-to-back losses that we have seen for the Lal Street itself. But yes, fingers crossed for a pullback today, given yesterday the nervousness prevailed over the Indian IT stocks on the back of Trump's visa fee hike. But we did see that majority of the brokerages and even the experts that we spoke to said that the earnings impact would be quite modest as companies have been reducing the reliance on H-1B visas and they should use this dip as a buying opportunity in some of these names. So yes, we'll track IT stocks in today's session also, and whether or not this negative sentiment prevails today or it has been priced in, we can actually understand from our market experts itself. Apart from that, consumption stocks that will continue to remain in the focus as the GST was implemented yesterday, and reports suggested that there was a good queue on the first day of Navratri for purchasing small new cars itself, especially for the small cars, to tap into the reduced rates itself. Now, whether we can get support from the positive cues of global markets is also something that we'll be watching out for. Because if you look at the global markets, overnight the US markets ended at a record highs on the back of Nvidia's good rally after its partnership with OpenAI. Asia Pacific markets were mixed. We did see Japanese markets closed on account of holiday, while rest South Korea and in fact Australia markets were fairly higher in today's session. But yes, apart from equities, commodities is also where the focus has been, because on the back of festivities and the Fed rate cuts, the gold prices are once again at record high levels. So we can watch out for gold finances stocks, Muthoot Finance, Manappuram, all of them in today's trading session. We'll be keeping them on our radar. All in all, we'll be discussing all of this and the trade setup with our experts, understand how your position should be in an environment like this. We'll also be taking your stock-related queries, so keep posting them on our live feed and we'll take them up shortly like usual. But before that, let's quickly take a look at the top headlines this hour. Stocks on Wall Street end the trading session higher. The S&P 500 rebounds, posts another record close due to push from Nvidia. Asian markets trade mixed, while the GIFT Nifty is indicating a tepid start for Indian markets. Crude oil prices edge lower as concerns over an oversupply outweigh tensions in Russia and West Asia. Gold prices scale to a fresh record high as market braces for more rate cuts from the Fed. External Affairs Minister Jay Thakkar meets U.S. State Secretary Marco Rubio. This is the first meeting since the tariff standoff, and the two leaders spoke on a range of bilateral issues, including trade, energy, pharma, and critical minerals. In an exclusive conversation with CNBC TV 18, JP Morgan's Jamie Dimon said that the US should be best friends with India. He said that the fee hike on H-1B visas caught everyone off guard and bats for merit-based immigration. And in primary market, Anand Rathi will launch a 745 crore rupees IPO today with price band set at 393 to 414 rupees per share. Three more IPOs from the mainboard segment, such as Jaro Institute, ICICI Technologies and Solar World Energy, will also be opening for subscription today. All right, like I was mentioning that, yesterday's markets were quite weak, and yesterday they did extend the weakness for the second consecutive day after the profit booking we did see on Friday itself as well. Nifty slipped below that 25 to 50 mark in the last session, and the broader markets that also ended the 11-day winning streak and ended in the negative terrain. Of course, IT stocks, that was a major laggard in the top sectoral and underperformer yesterday. Nearly 3% cuts coming in from the counter, with heavyweights like Tech Mahindra, Infosys, TCS, all of them dominating the top Nifty 50 losers list. Apart from that, we also saw weakness coming in from another export-oriented counter, that was your pharma index, ending the day with about a % loss itself. But yes, apart from that, we did see some, financials that helped hold the ground. However, it did end in the negative territory, but that is what held the fort in yesterday's trading session. But yes, today all eyes will continue to be on Commerce Minister Piyush Goyal's visit to the US and any developments that is coming in from the bilateral trade front and a tariff front that will be keenly watched out for the market participants itself. But yes, 10 IPOs in the primary markets that is set to open today across the mainboard and SME segment. Like I was talking about, Anand Rathi will be opening its IPO today from the mainboard segment, and three more mainboard IPOs will be on the radar as well. But yes, coming to the cash flow position, FIIs, they stood as net sellers in yesterday's trading session, 2792 crore rupees. That is what they have sold in the cash markets. And DIIs that have bought stocks which was worth about 34 crore rupees in the cash markets itself. If you look at the put call ratio, dropped to about 0.72 from 0.94 levels. And the stock that has been added in the F&O ban, that is your RBL Bank, and the stock that continued to be a part of it, that is your HFCL and Samman Capital, and Angel One is now exited the F&O ban list as of now. But yes, let's take a look at how the pre-open rates are stacking up, because we are, the GIFT Nifty trends were pointing out to a negative start for the Indian markets. And of course, if you look at the Sensex, still flat in with a negative bias at the pre-open rates, and Nifty is also below that 25 to 50 mark in the pre-open itself. But yes, on that note, let's quickly get on board with the technical expert of the show. Joining me is Jay Thakkar of ICICI Securities. Jay, good morning. Nifty once again ended lower for the second consecutive day, slipped below that 25,200 mark. What are the next levels that we need to track? And of course, happy Navratri to you.
Very good morning to you, Lovisha. Thank you so much, and my best wishes on Navratri to you and entire team of Z Business, as well as all the viewers of Z Business, as well as on behalf of ICICI Direct. So, I wish that these overall 9 to 10 days brings a lot of fortune and good luck in everyone's life. Now, as far as Nifty is concerned, yes, Lovisha. Since past 2 days or past two trading sessions, rather, we have been seeing weakness in the market after a strong run up of almost 1,000 points from the lower levels, from 24,400 approximately to 25,400. Market seems to be now taking some pause. And what so far, Lovisha, we have witnessed is that we have had a good sectoral rotation, which started with auto, FMCG, followed by the real estate stocks, so probably the defense names, the um, FMCG names. Also, did came the pharma in between, and the railway stocks, all were with capital market names. So everywhere where auto and FMCG, I would say, had seen long build up. So we saw a good up move, and rest of the sectors, Lovisha, had witnessed short build up. So there we have seen short coverage. So market as of now, which has 15 sectors, Nifty has 15 sectors within it, of which two sectors which carry almost 50% weightage, which is Nifty IT and the private sector bank. These are not performing, and hence market is finding difficulty to continue its uptrend quite swiftly. So as of now, 25,000, I think those levels can be tested till 25,400 levels are not taken off.
Okay. But Jay, yesterday Bank Nifty also fizzled in the red. But however, in the past couple of weeks, we have seen Bank Nifty actually making a comeback. What are the levels that we can track out from the Bank Nifty index going ahead in the session as well?
Sure. See, Lovisha, Bank Nifty did move up, and within that, if you see, the PSU pack, overall PSU banking pack overall performed quite well. Be it be SBI, Bob, Cat Bank, you see PNB, all of them actually had contributed quite a lot for this up move in Bank Nifty. And we did see a short covering move coming in Axis Bank. There were a lot of shorts there, and we saw a good short covering happening there. But that was one stock which from the private sector bank, which bounced back significantly. As compared to these stocks, that is the PSU banking name and Axis Bank, I don't see any other private sector bank actually have contributed that much. However, 55,000 on Bank Nifty is a very, very critical support for this September series. Now, next week is the monthly expiry, right? Next Tuesday. So I think for this 1 week trading session kind of a day, or five to six trading sessions, I think 55,000 on Bank Nifty is very, very critical. If those levels are broken, Rohisha, you can see some more correction. Even it can test its previous lows. 55,000 levels are held. Probably then until expiry, Bank Nifty may spend time between say 55,000 to 56,000. So that's the upside.
Okay, all right. All right, let's also talk about IT stocks because that's a major hit yesterday. What does the chart indicate going ahead, Jay? Can we see more downside left, or is the worst already behind us?
Lovisha, I'm sorry, I didn't get you actually, I didn't get your voice.
I was saying that IT stocks, that saw a major impact yesterday on the back of the Trump's visa fee hike news. I'm asking that, whether or not this worst of the underperformance has been behind us, or can we see more downside left in the majority of the counters?
Well, see, last 2 days, if you see, Lovisha, we have seen the spike in the India VIX as well. Although there have been no move in IVs, but India VIX has gone up since past 2 days, indicating nervousness. Also, US markets are performing well at life highs. The gold and silver prices are moving up, so metal prices are going up. The money, which is always a factor in moving the prices. I mean, if the money is limited and if the money is moving into these asset classes, then definitely overall up move you would not be able to see out here. Okay, so as of now, I think that we have had a good bounce so far, Lovisha. Very critical resistance for Nifty is this 25,400 to 500 range. If you are unable to take off this range, I think for a temporary basis, short-term bounce seems to be getting over, and market may get into some consolidation.
Okay, okay. Let's also talk about Nifty Pharma Index because that also slipped in in yesterday's trading session. Jay, what are you finding from the Pharma Index? You know, the stock. I mean, the index has been oscillating in red and green in the last few couple of sessions itself. But going ahead, can we expect a sustainable up move?
I think pharma is still likely to consolidate even more. There are few pockets wherein there were shorts like Aurobindo Pharma and Pharma. We did see some short covering happening there. The good names like Laurus continues to move higher, forming again lifetime high. Dr. Reddy's also performed quite well. But otherwise, those majority of the pharma names, apart from Laurus Labs or something like that, are into consolidation phase. So I think, Lovisha, I mean, 22,800 to 23,000 levels on Nifty Pharma Index. Still, those levels are not taken off meaningfully. Pharma can slip back to 21,500 to 21,000 levels as well. So some more consolidation for pharma going forward as well. I mean, see what the kind of tariff imposition of the president of US is talking about. I mean, there is still fear still until we don't get into a deal. Although there are talks, we have our ministers now visiting the US again. So hopefully that happens soon. Unless until that happens, I mean, there is always this fear of further imposing of tariff on some other sector. Maybe farmer, you never know. So hence, if until unless you don't have that much of clarity, I mean, to have that kind of a very swift up move, I think it's difficult.
Okay, okay. What about the Nifty Realty Index? That did well yesterday. What can we expect it to happen
Yeah.
over the next couple of sessions? Because we did see some good build-up coming in after the underperformance that we saw in the month of August.
See, Lovish, Nifty Realty is one sector which had witnessed a lot of shorts in the previous fall from say 25,300 to 24,400. And this is the last sector which bounced back, I would say. Obviously not the last, but second last because private sector has not in fact bounced back even that much of private sector stocks. So overall index specifically, I would say that Lovisha bounce has come. It may continue say until 970, 980 as well on the upside. But there's not much of clarity whether the stocks or the sector has bottomed out yet, right? So, and this has a very high correlation with the banking as well. I mean, it's going to be very difficult if that, reality makes a new high in banking and so on. Generally, it doesn't happen that way. So, till we don't see very much of clarity in the banking, I mean, being too optimistic in real estate is also not right. So, I think one should wait and watch if someone actually really want to get into real estate names because those are high beta names.
Okay, okay. Let's also touch base on consumption names, given the GST has already been implemented and everybody is, lining up for consumption theme to actually outperform going ahead. How are you placed on autos, consumer durables, or for the matter of FMCG?
These three sectors, I have no doubt. I mean, they are good at these levels from medium term to long term perspective as well. Auto definitely, tops as compared to all three of them. I mean, it's relatively looking better. Obviously, followed by Nifty, FMCG, and consumer durables as well. So obviously, there is a fundamental change overall for this sector, which is definitely help them to improve their earnings and which will definitely translate into, stock prices going higher, right? So, and technically too, these all three sectors are looking positive, even from a derivatives perspective. So, auto names, even four-wheeler, two-wheeler, all of them are looking great. It's just that Bajaj Auto, amongst all this, have been underperformance, so probably, it can catch up going forward. And FMCG, HUS slowly and gradually is trending higher. You see Tata Consumers, Godrej Consumers, Marico. Now, these two stocks, Marico and Godrej Consumer, as a disclaimer, we had a range bound strategy out there. So they might consolidate for some time. Otherwise, these sectors are looking positive.
Okay, okay. What about the gold finance stocks? Quick take on those as well, Jay?
Bullish, absolutely bullish. Until unless you see this rally happening in gold and silver prices, these stocks are looking bullish.
Okay, all right, quite bullish on the charts. All right, the first trade's coming on your screen. Nifty has opened quite flat in the trade at this point of time. If you look at the rates, Sensex is up about 64 points. Nifty is also up above that 25 200 mark at this point of time. Very quiet start for the markets, given that we were expecting certain pullback, but of course, very flat and quite mild start for the markets as of right now. The global settle has been quite supportive. So on the back of that, we can see some, good moves that is coming in for the markets as well at this point of time. Let's take a look at some of the sectoral gainers and movers. If you look at the mid cap also, mid cap has opened in the green with about 0.1% gains. Bank Nifty has also opened up with green at about 0.1% gains coming in for the Bank Nifty also. But all in all, it's a very mild start for the markets as we were expecting certain kind of a pullback. But however, still Nifty holding above that 25 200 mark as of now itself. But let's take a look at some of the sectoral movers and gainers in the early minutes of the trade. Nifty Auto Index holding well with about nearly a percent gains coming in for the Nifty Auto Index. If you look at Nifty IT after yesterday's underperformance, mildly ticked up with about 1/10% gain. Other than that, we can see Nifty metals have been, seeing good traction. 0.2% gains coming in for there as well. Nifty Realty Index has opened quite mild in the positive with a flat with a positive bias after a good performance yesterday. Like we were discussing earlier about consumer durables and then FMCG and of course the auto themes. Auto has opened up quite positively. On the other hand, FMCG and consumer durables quite flat in the trade at this point of time. Other than that, we can see PSU banks have also taken at the back front, flat to a negative bias at this point of time. Let's take a look at some of the Nifty gainers and losers then. Of course, the auto stocks are in the fast lane today. You can see the likes of Maruti with a gain of about 2% coming in for there. Eicher Motors, M&M, Bajaj Auto, all of them seeing nearly a gain of about a percent or so in today's trading session. So all in all, it is the auto themes that is being ridden in this market at this point of time. On the other hand, on the losing end, if you look at the Nifty 50 losers, Adani Enterprises after a good performance yesterday, 4% uptick. Today it's seeing a bit of a setback with about 0.5% cut coming in there for Adani Enterprises. Eternal also not doing well with about 0.4% cut. Sun Pharma, Ultratech Cement, Trent, Adani Ports, some of the other losers on the Nifty 50 at this point of time. But let's quickly take a look at some of the stocks in focus. We'll talk about Glenmark Pharma first. The stock has been doing well, nearly a percent gains coming in for the counter as the board is expected to meet on September 26th to consider an interim dividend for FY26 with a record date of September 30. The stock has been an outperformer so far this year. Today also the stock is seeing nearly 1.5% gains coming in there itself. What can we expect the next moves to be, Jay, for Glenmark Pharma?
The Glenmark Pharma overall has been one of the outperformers in the Nifty Pharma, right? Now the critical level for Glenmark Pharma on the upside is 2115, 2115, Lovisha. Above those levels, it will confirm a breakout and the stock can inch towards say 2300, 2400 as well. Till those levels are not taken off, I mean, the stock has a higher chance of consolidating. I think that the overall see setup for the medium to long term is bullish. It's just for the short term, 2115 needs to be taken off.
Okay, all right. Let's take another stock in focus, that is your Brigade Enterprises. The stock has been doing well in today's trading session, given that the company has signed a joint development agreement for 1,200 crore rupees of a residential project in South Bangalore. Now, this will be spanning about 7.5 acres itself. But so far this year, the stock has been an underperformer. Today, the stock is doing well, 1.6, nearly 1.5% gains coming in there for the counter itself. Jay, what can we expect? I know we mentioned about Nifty Realty Index to be in a consolidation zone. However, for Brigade Enterprises, what is the next move that we can track?
Well, it's a non-FNO stock, so I have to look at quantitative perspective. Can't say from the derivative perspective for sure because we don't have FNO build up out there. But then the overall trend setup still looks quite bearish. See, it's quite oversold. So, but the critical support level for this stock is 850, 860 zone. So if it comes to those levels, it would be a good bet from the risk reward perspective. Otherwise, on the upside, if it takes off 970, thereafter, it can take off its previous swing high, and we can say that, okay, the downtrend is over. So either you buy about 970 or you buy around the levels of 860.
Okay, all right. Let's take some of the viewer queries that is dropping on our live feed then. The first query coming in from Naveen is asking whether it is the right time to enter Adani Power at the current market price. Of course, the stock did see a split yesterday. And today, if you look at the counter, the counter is still
I'm not getting your voice,
it's
sorry.
down at this point of time. But yes, for Adani Power, what would you suggest, Jay? Is it a good time to enter the counter?
Well, see, Adani names have definitely done good, and obviously after the clean sheet from the SEBI or the regulators, we have seen short covering happening in all of those names, and a strong run-up happening out there, getting now good build-up as well. Adani Power is also known if stock, but then this has been one of the best performer, I would say, from the entire Adani pack, and these are Adani ports. So I think the overall trend is still bullish. It's just that the previous swing highs are somewhere around the levels of 175, and the stock right now is trading around the levels of 168. So it's near to his previous swing highs. So obviously, Lovisha, you'll feel that, or you'll see some profit booking, but that should be used as a buying opportunity. For a medium to long term perspective, Adani Power looks bullish.
Okay, all right. Let's take another viewer query then. On that note, we have Satya who's been asking the view on Voltas because he's recently entered the counter at around 1400 odd levels. He's asking what are the short to medium levels to watch out for the counter itself. Voltas 1400, that is where he has entered, and right now the counter is trading at about 1385. Yesterday, the stock did see a dip on the back of a brokerage under call also on the counter. But yes, from a near-term to medium-term levels perspective, Jay, what should you do?
See, Voltas has a gap in the range of 1320 to 1280. And if that gap is likely to get filled up, the stock can fall till those levels. The critical level for Voltas, I would say, Lovisha, to accumulate would be somewhere around the levels of 1220. So there's a risk of a downside of filling a gap. Okay, and 1440, 1450 is a very critical resistance for this stock. So till those levels are not taken off, you would see this stock consolidating. From a long-term perspective, the stock is bullish. From a short-term perspective, it has gone into some consolidating mode, especially after yesterday's fall.
Okay, all right. Some consolidation could be expected for the counter. Let's take another viewer query on that note. Satya has also been asking the view on Shalby Hospitals for accumulation and, of course, for the long-term investment itself. What is your view on the counter, Jay, for Shalby Hospitals? In the past 1 month, the stock has done quite well, nearly 30 plus percent gains coming in for the counter itself. But what can we expect the next moves to be?
Definitely, the stock up move recently has come with, and there hasn't been a good cup and handle pattern, so that is positive. So going forward, 215, 215 levels will be critical support. Till those levels are held, the overall trend should be bullish for a target of 290, 300. Secondly, the recent up move which has come, which has come on back of very strong volumes. I mean, I have not seen these kind of volumes in Shopee since it's listed, right? So a strong price action with volumes. So it's a price volume breakout. And when this kind of a thing happens, definitely it's good for the medium to long term.
Okay, okay, of course. So we did see that yesterday. The promoter has also hiked the stake. On the back of that, the counter has gained quite significantly. All right, let's take another viewer query. Then we have V Parivar has been asking the view on Bharti Airtel, on how the counter looks like. So far this year, the stock has been an outperformer, but from the past 1 month, the stock has been in a consolidation mode. What can we expect the next moves at the target levels that we can watch out for Bharti Airtel, Jay?
Because see, Bharti has been one of the really good performer as far as Nifty is concerned. I mean, kind of duopoly market. I mean, see, Vodafone, we all know, has been losing market share. So kind of duopoly because of Bharti and Jio dominating the sector. So these sector stocks have definitely done good. Jio is unlisted, so won't be able to comment on that. But then Bharti, being the only listed player which is doing significantly well, so definitely it has attracted good money, and because of which the weightage of Bharti on Nifty has gone up. You see, so we've seen the reduction of weightage in IT and some other few stocks in Nifty, but then the one stock which has gained significant weightage is Bharti Airtel, right? So that, because of which what happens is that there is a continuous flow of index funds. Now in the near term, I think 1980. Lovisha, needs to be taken off in order to move to 2060 2100 levels. Right, so 1980 is a critical resistance. I mean, only above that you should be thinking of buying Bharti. Otherwise, it may consolidate within say 100 to 150 points.
Okay, 1980, those are the levels that we need to watch out for Bharti Airtel itself for a further up move. Let's take another viewer query. V. Parivar is also asking the query on Oberoi Realty on how the counter is expected to perform in the medium term. Of course, after the June top, Oberoi Realty has been on a sliding and a negative trend. But yes, Jay, what can we expect? Further underperformance on the way?
See, as I said, Lovisha, real estate stocks have seen good shots. Whatever bounce we have seen is on account of short covering. So I'm not expecting major movement of right. I think the stock is likely to break its 1450 lows going forward. You know, and only around the levels of 1300 or 1250, I think this stock will make a good bargain buy or maybe a good risk reward. As of now, there is not much of upside clarity as far as the stock is concerned.
Okay, all right. Let's take another viewer query then. Nitin Shahji has been asking the view on TVS Motors and he's asking whether he should book profits from a medium term perspective. TVS Motors, what do you expect? Of course, the entire auto pack has been seeing a good momentum. But for TVS Motors, what would you suggest? Is it time to book profits or a hold is a wise strategy?
Lovisha, see, two-wheeler names are likely to do good on back of GST. And we've seen strong auto demand coming as well as a reversal in the monthly charts as well. Now, this has been a sector leader as far as two-wheeler is concerned. So, why do you want to sell leader if the overall outlook is bullish? Okay. And there are no such cues that, overall the stock seems to be topping out either fundamentally or technical or daily report of. So, I think continue riding the trend till you don't have a negative view on the sector. Or maybe, there is a corporate governance issue. Till then, you continue to ride the bullish trend.
Okay, all right. Let's take another viewer query then. On that note, we have Debu K who's been asking the view on Crompton Greaves and the support levels that we need to track on the counter itself. The stock has been an underperformer so far this year and, it has been on a structural downtrend itself. What are the support levels that he's asking, Jay, that he needs to track at this point of time?
It's overall oversold in the short term, but then the medium to long term supports are around the levels of 260. So there is a chance that if market weakens from here on, Lovisha, then it can slip to 260 as well.
Okay, all right, 260 as well that we can watch out for as a support for Crompton Greaves. Let's take another viewer query on that note. We have Debuk who's been asking the view on Sona BLW itself on how the counter is expected to perform from the near-term perspective. Of course, the auto and ancillary space has been under the heat on the back of the tariff threats itself. But yes, on the back of some GST, up moves, GST triggers, the stock has been witnessing some kind of a catch-up. But however, it has been on a sliding trend and it has been oscillating between that 450 to about 490 mark. Jay, what can we expect for the counter? Can we expect further underperformance for Sona BLW?
Looks like, yes, that we can see some further underperformance. See, Lovisha, the stock is in the FNO segment and we have seen short buildup. So the breakout or a covering will be seen only above 450 levels. Above 450, you can buy till then avoid to buy this. If you're having it, then I think the stop loss is quite far. It's around the levels of 390. So it doesn't make sense. I mean, if you're already into this stock, I mean, you can exit and look out for an opportunity beyond 450.
Okay, all right. All right, let's take another viewer query then. On that note, we have Manish Verma who's asking the view on IT companies and he's asking whether he should get out of companies like Persistent Systems and Coforge and increase exposure to NetWeb, Tanla and Latent View, etc. Your thoughts on the same, Jay? What would you expect? Is NetWeb, Tanla Technologies better opportunity?
If you're getting out from IT from the better names like Persistent, Coforge, then I think you don't get back into the IT.
Okay.
So you look out for some other sectors as we discussed, like auto, FMCG, and all of that. Because see, it's like their overall sector is burning or is in problem. So how does it makes a difference from getting out from one stock and getting into other unless you have corporate governance issues or maybe the growth issues. That is not witness. I mean, all are into the same bucket. So rather, if you want to reduce your IT positions, you can. Definitely, the outlook is not that bullish, at least from the medium to long term perspective. From this point of time, now, wherever we have a clarity, even if that is 10% higher, but then it's fine. We should be having a clarity. As of now, there is not much of clarity for the upside, and there is a clarity for a downside. So, being heavily exposed to this sector itself is not prudent. So, why to get into other stocks in the same sector if the overall sectoral outlook is only good?
Okay, all right, all right. All right, let's move on to another viewer query then. Swaraj is asking the view on HUL for an entry level. Of course, so far this year the stock has been gained about 10% itself. But what can we expect? Is there more upside left in the counter, given that GST is a big bet on consumption revival for majority of these consumption plays itself?
See, medium to long term perspective, yes. But then, see, these are, I mean, gone are the days wherein we had seen, the FMCG stock moving like momentum stocks. I mean, definitely, these stocks are generally tend to be defensive, trading slowly. So, if you're chasing momentum in HUL, then it's a no. But if you're looking out from a good investment opportunity, yes. And it has got a good support in the range of, say, 2500 to 2480. So, you're looking for a good entry price, and that's the level.
Okay, all right. All right, let's take one particular buzzing stock in trade today. That is your KC International. The stock is seeing good moves, 5% gains coming in for the counter after the company secured 30 to 43 crore rupees worth of new transmission and distribution orders, which includes the largest ever EPC order, which spans about 400 kilovolt of transmission lines in the UAE and the supply of towers and poles in the Americas itself. But past 1 month, the stock has picked up momentum. Today, the stock is seeing good up move, 6% gains coming in for the counter. Jay, what can we expect the next moves to be? Can we see further upside from KC International?
Yeah, the stock is looking bullish, and if it takes off 950 Lovisha, it is straightly heading towards 1200.
Okay, 1200 is the level that we can next watch out for KC International then. All right, let's take another viewer query on that note. We have Kanchan Biswas who's been asking the view on REC at 10% as of date. REC, how does the stock look like? Because the stock so far this year, no major moves, and of course 23% declines coming in for the counter. And if you look at the past 1 month, the stock is trying to play a catch up with about 3% gains. But what can we expect the next moves to be for REC, Jay?
Well, see, REC overall has seen a good shorts build up, and we are seeing short covering, which can help the stock to even inch higher until 424.25 as of now. But then it has already run up from 350. So it might consolidate. If it falls, say, towards 370, 365, it would be a good risk reward. Thereafter to get back into this stock.
Okay, all right. Those are the views coming in for REC as well. Let's take another viewer query then. Now we have V Parivar who's been asking the view on how further could Gabriel India move. It's been a highest weekly gainers for the last 4 weeks, and what is the level to best to add more in the counter? Of course, past 1 month we have seen this stock has already gained about 14% itself. But yes, what would you suggest the next level to add at this point of time be, Jay? Or can we expect to hold at this point of time?
See, Gabriel has been a strong performer, but there is a negative divergence in the momentum, Lovisha. So if 1250 level breaks from the momentum point of view, one should be exiting. Till 1250 levels are held in this negative divergence as well, the stock can inch towards 1350, 1370.
13, all right. Let's take another viewer query. We have Ratnakumar Solomon who's been asking the view on Wipro. Of course, given the IT stocks have been an underperformer so far this year, Wipro, what can we expect next moves, and of course any levels that you want to point out?
See, it's looking bearish unless it takes off 260. I think the overall outlook is bearish for a target of 240 first, and if 240 breaks, then it's going to be 225 and 210. So overall outlook is bearish till 260 levels are not taken off.
Okay, all right. Let's take another stock which is buzzing in trade today. That is your RVNL. Nearly 0.5% gains coming in for the counter after it emerged as the lowest bidder for about 145 crore rupees worth of Southern Railway project to design and supply on the Jolar Petai and Salem section. Of course, railway stocks have been picking up quite a momentum. RVNL also doing well with about nearly 1% gains coming in right now. But how much of an upside do you see going from here on?
we have seen a lot of shorts build up there, and we have seen short covering happening there. And I think if stock consolidates right now and gives an opportunity around the levels of 355, it would be a good buy with a stop loss of 340 for a target of say 380.
Okay, all right. Let's take another viewer query. Then we have Shweta, who's been asking the view on transformers and rectifiers on how the counter is expected to perform in the short to medium term. Jay, any thoughts on the same for transformers and rectifiers on how does it look like on the charts at this point of time?
Well, see, transformers, rectifiers is looking relatively sideways to positive only from these levels. And I think definitely there can be some 4 to 5% minimum upside. Looking at the overall sectoral move right now, positionally, I think the stock is looking good for another 15 to 20%.
Okay, all right. Let's take another viewer query. Then we have a query on Stallion India fluorochemicals and how the counter is expected to perform. 41% of an uptick that we have seen in the counter already in the past 1 month. Can we expect further outperformance going ahead, Jay, for Stallion fluorochemicals?
Less of data, Lovisha, to be very honest. But then with whatever data is there, I mean, as you said rightly, that we have seen a good run up already. So I think that Lovisha, 200 is a good support till those levels are held. You can see the levels of 220, 230. But then, it's not giving much of risk reward from this point of view.
Okay, all right. Let's take another viewer query. Then we have G Comment has been asking the view on LNT and how the counter looks like. Of course, this the stock has been oscillating in a consolidation mode around that 3600 to 3500 itself. But yes, Jay, any levels that you can point out for LNT?
Only about 37.50 one should be looking out for buying LNT. If someone is chasing momentum. About 37.50, there is a breakout from this consolidation which you just mentioned, right? About 3750. Definitely you can buy. If these lower levels are not taken off, it might fall back into a consolidation, say of 33.50 to 37.50.
Okay, all right. 3750. That is what we can watch out for LNT itself. Let's take another viewer query. We have Shweta, who has been asking the view on Anant Raj. She's seeing about 15% profit on the counter. She's asking whether she should book profits or she should hold at this point of time. Anant Raj, what should she do? What is your suggestion, Jay?
As we discussed, Shelby, likewise in Anandraj, you've seen this breakout coming out with higher volumes. It's a price volume breakout. I have not seen this kind of volumes ever in this Anandraj. So I think if this has come with a strong breakout with the volumes, then till 600 levels are held from a medium term perspective, there is a good chance stock might head towards 900 plus levels.
Okay, all right. Let's take another viewer query. We have Harish Thakur has been asking the view on Paytm on how the counter looks like from a short-term perspective. Of course, we have seen so far this year the stock has seen a good build-up. However, after that we have seen that the stock has entered into a consolidation mode. What would we expect the next moves to be, Jay? Because the stock is under a consolidation mode at this point of time.
Medium term perspective, Paytm is looking bullish, but short term perspective, there may be some consolidation. However, it has got a good support at 1150. So if someone is bullish, 1150 should be a stop loss on a closing basis.
Okay, 1150 can be the stop loss for Paytm, and that's what we need to track at this point of time. Let's take another viewer query. Harish is also asking the view on PFC on how the counter looks like at this point of time. In the past 1 month, the stock has seen a good momentum, nearly 3% uptick coming in for the counter. But so far this year, the stock has been an underperformer, 8% declines coming in for the counter itself. PFC and of course the entire power finance space, how would you position yourself in this?
And we have seen some short covering happening in this stock as well. I mean, see, these stocks are oversold and are bouncing back, but the overall outlook from the medium to long term perspective is not that bullish. But then short term perspective, definitely since there are a lot of shorts, we are seeing some short covering happening, and PFC can, what do you say, extend its rally till 440. But medium term perspective, I don't see much of upside, at least in REC and PFC. But from the short term perspective, definitely since these stocks are oversold, we can see some bounce back.
Okay, okay, all right. Let's take one particular stock which has been buzzing in trade today, nearly 0.5% gains coming in for the counter. That is your Alkem Labs. The pharma company has launched Pertusa, which is a newly developed breast cancer drug in India itself to expect access to the positive treatment. The stock has been range bound past couple of months, but yes, Alkem Labs, what can we expect the next moves to be? Today the stock is seeing like mild momentum with about 0.5% gains.
50 to 50 is a good support. Till those levels are held, I think Alchem can inch towards 60 to 50. So overall stock looks both positive. The trend is positive. High tops, high bottom information. 5 to 5, 50 to 55 to 50 from the medium term perspective, Lovisha, is a good support level.
Okay, all right. Those are the levels that we need to watch out for Alkem Labs. It's also, let's take another viewer query. G Comment is asking the view on Bajaj Finance from a one-year time horizon on how the counter looks like. In the past 1 month, the stock has picked up good momentum, 12% uptick coming in for the counter. But yes, and the stock has also crossed that 1,000 mark itself in today's trading session. What can we expect the next moves to be, Jay, for the counter?
Bajaj Finance is looking positive, Lovisha. 950 is a good support. Till those levels are held, the stock can inch towards 1100.
Okay, all right, 1100 levels that we can watch out for. All right, those are the viewer queries that we have had right now. We have Ranjit Kumar who's also asking the view on Astral stock because the stock has been falling for the past 3 days, and he's asking whether or not we should hold or wait till 1360 levels. Any views on the counter for Astral, Jay?
See, it's oversold, can bounce back, but the overall trend is negative. It's very difficult to trade these kind of stocks which have already entered into a negative zone, which are bearish, which are into a bear market. Now, when the stock is into a bear market, how much will it bounce is always a difficult question, because what happens when the stock is into a bear market, it bounces and then falls again, right? So we are trading for the bounce, and the bounce is very little, and then it falls back, and we are into a trap. So difficult to say much about this stock because it's already into a bear market. I would say just one thing that 1340 is a support. If those levels break, I think this bounce back will fail to continue probably, and the stock might inch towards 1000 as well. So keep an eye on 1340. I mean, till those levels are held, you can expect a bounce back to come in this stock. If the market also bounces back, then it can bounce back to 1600, 1700. From long term perspective, this stock is into a bad mark.
Okay, all right. All right, just one last question before we let you go, Jay. What are your top picks? I know we have discussed a range and a whole host of stocks today, but anything that you're watching out from the market and seeing as a buying opportunity?
Well, as a disclaimer, I would like to say that this stock we have recommended to our clients as well. And from the short-term point of view, I think basket Hindustan Zinc look positive. With a stop loss of 450, one can go long, targeting around 490 to 500. I mean, look at the silver prices, they've gone up, and definitely it helps the stock or company profitability as well. And the stock seems to has formed a good rounding pattern, which is a bullish reversal pattern. The momentum is back into the bullish mode on the daily, weekly charts, and we are seeing the open interest getting built up as well. So from the medium to short-term perspective, I think Hindustan Zinc is one stock which one can look for buying with a stop loss of 450 or 455 rather, and target around 490.
All right, all right. All right, with that we have to let you go, Jay, but thank you so much for your time and answering our viewer queries so patiently.
Thank you. Thank you. Always a pleasure to be shown a vision. Thank you.
All right. All right, let's take a quick check of the markets, how we are faring at this point of time. Well, the Sensex is, earlier we did see some pullback in the early minutes of the trade, but however, we have back once again. We have slipped below that 25,200 mark itself. We are also below that 25,150 mark at this point of time. Nearly 62 points downtick coming in for Nifty 50 at this point. If you look at Sensex, that is also down now, nearly over 150 points downtick coming in for Sensex itself. What is holding well in the green? That is your Nifty Auto Index with about 1% gains coming in for there. What is doing well, that is your Maruti Suzuki, M&M, Tata Motors, all of them seeing gains of about 1 to 2% in today's trading session. On the other hand, if you look at the India Wix, that is also bumped up with about 1% gains coming in at this point of time. However, it still remains at comfortable levels for the time being. On the other hand, if you look at the Nifty IT Index, that has fizzled out in the red. Nearly 0.5% cuts coming in there for Nifty IT Index. as we were expecting. Earlier, we did see some kind of a pullback in the IT index. However, it has once again slipped into the negative territory. Let's take a look at some of the other sectoral movers as well. Nifty Pharma Index with about 0.4% declines. And if you look at Nifty FMCG, also with nearly 0.5% cut as well. But yes, before that, let me introduce you to Money Control Super Pro, which can be your ultimate investment superpower. You can get all your live trading calls and investment ideas from semi-registered experts, pre-identified chart patterns and AI-powered stock alerts on your WhatsApp to help you trade and invest with confidence. So download the Money Control app today itself and subscribe to Super Pro today. All right, with that, let's quickly move on to our next guest of the show. We have Mayuresh Joshi, Head of Equity Research of William O'Neill India, joining us. Mayuresh, good morning. We did see what happened with the IT sector on the back of visa hike news flow, but do you also concur that the impact is just as sentimental and the worst is already priced in?
Morning, Lovisha. Always a pleasure to be on your show. No, I think two aspects here. One, I think the impact obviously is sentimentally driven at this juncture. But what kind of an impact does that have in the next financial year? I think that is something to be deciphered at this juncture. And therefore, I think with rising H-1B visa costs, and there is also a higher act looming in the background as well. Does that mean that more local talent gets sourced? And will that add to the employee costs, or the outsourcing costs probably increase in terms of offshoring to other centers close to the US, whether it's Latin America or Mexico, and that has some element of impact on the margins. I think the street has taken that in a very mature way, and therefore I think how does this play out in terms of expected numbers going forward? Maybe a marginal impact in terms of earnings if the entire thesis plays out. But I think the street has taken that very, very maturely as far as the sector is concerned.
Okay, all right. But would you say this correction is a buying opportunity for majority of the IT stocks? And which would you say is a better place, mid caps or large caps in the current scenario?
No, again, I think we are largely neutral, Lovisha, because I think our take is that there is a huge transition happening for the sector as a whole. And our entire ecosystem, whether it's large cap players or a large pool of our mid cap players as well, I think they need to adapt and adopt themselves in terms of the changing ecosystem. In fact, every weekly meetings that we probably have internally, where the tech team is also involved, we are trying to incorporate a lot of agentic AI processes in our own internal systems as well. And every week, the agentic AI agents are probably changing, getting modified. And that is the ferocious pace at which AI is probably evolving. And therefore, our IT companies need to evolve quite significantly as far as AI is concerned overall. And therefore, I think this entire transition in terms of both cost and time, in terms of either upskilling their existing resources and investing in terms of creating better efficient platforms to compete with global players. I think that might be the need of the hour over the next few months and quarters. And that will take some element of toll as far as numbers and margins are concerned. And therefore, my own sense is that as this transition takes place from the typically outsourcing model that our companies used to do, the margins will probably get capped off. And as the margins get capped up, the incremental expectation in terms of superior earnings growth, pricing remaining in our favor, for a few projects it will, but I think for a vast majority of the sector as a whole, might remain a little bit circumspect. And therefore, I think companies which are probably a tad bit more adept and will adopt to these processes quicker and the go-to-market will be far efficient. I think those companies might actually benefit a tad bit. I think so. The only stock that we're probably holding in our global portfolios is Emphasis, because our take is that the company has geared up pretty nicely in the past few quarters, and it's shaping up very well as far as these new challenges are concerned.
Okay, all right. Let me just shift the conversation to the consumption theme as well. That is the big street bet that is coming in itself. And today you can see auto stocks also rallying on the back of that on the GST news itself. But how are you finding the valuations at the current juncture? And do you think the good news is already baked in the price?
No, so to a large extent, yes, because the price move have already happened. Now it's going to be individual stocks within individual sectors because the consumption basket, Lavisha, is pretty huge. Whether you talk about durables or you talk about discretionary. Obviously, I think with expectations of the rate rationalization and the cuts which have probably happened, a large pool in terms of volume growth will start coming through. I think a lot of companies have indicated that, right, from auto companies to FMCG companies, where volume growth is expected to take place in the next few months. And therefore, I think with pricing coming back in that favor, volumes expected to see an uptick, specifically when it comes to the discretionary items, when you're talking about FMCG, footwear, apparel makers, combining that with the festive season that is expected to start, which has already started with Navratri. I think a large basket might actually do well as Q3, Q4 earnings start coming through. Now, how much of a consistency will happen after that? Once this euphoria is probably over in the next 2 quarters, I think that is where the apprehensions are coming from. But I think the street probably believes, and a lot of managements probably believe that this is probably structural in nature, where once the consumption drivers are probably in place, they continue for a length of time. So what might actually happen is Q3, Q4, you might see a huge bump up that probably happens. And then it might plateau off. It might just consolidate in terms of those numbers on a quarter-on-quarter basis, improving just a tad bit and not a massive improvement that you'll probably see in volume numbers immediately over the next 2 quarters. But yes, incrementally, I think numbers will start becoming better on balance sheets. The leverage will start playing out, which will play on EPS. But you need to be a little bit more selective because once valuations are a tad bit higher and it's penciling in reasonable amount of growth for the next 6 to 8 quarters, we need to find outliers which can probably outperform the sector as a whole. But within consumption, again, I think yes, autos, auto ancillaries, FMCG companies, footwear companies, domestic apparel makers, hotel companies selectively might continue.
Okay, okay. Mayuresh, apart from consumption, any other sectors that you're watching out for in terms of growth conviction and growth visibility from here on?
So NBFCs, Lavish, I think our take is that NBFCs probably are in a very sweet spot as we speak, because for all of these drivers to take place, whether it's consumption or infrastructure growth, the financial system has to probably back it up, and therefore NBFCs selectively, which have leadership position, where credit ratings are top notch, and which have the advantage in terms of better name spreads, better balance sheets, might actually do well. Expectation again largely is consumer durable discretionary loans might actually start picking up. You've seen green shoots as far as private capex is concerned, and therefore I think both these aspects should probably start playing out, and therefore NBFCs as a space can probably continue doing well in our opinion. Select infrastructure stocks as well, Lavisha, because government capex will continue. The argument here is that it might just slow down because of the compensation that they'll probably have to do in terms of the GST rationalization that has probably happened, income tax cuts as well, which might take the revenue aspect off as far as the government is concerned, and the government still intending to maintain their fiscal targets. Public capex might be a tad bit off, is the apprehension again, but I think it will still continue at a good pace. And therefore, domestic infrastructure companies, which have a good presence domestically, an offshoot of that can also be cement companies, as an example, might continue doing well. So I think a few of these themes outside consumption is where earnings might continue holding up in our opinion.
Okay, okay. You did mention about NBFCs. I want to understand for banking space itself, particularly for private banks, given that, in the last 2 months, we did see some underperformance. We're seeing some pickup right now in the past couple of weeks itself. But do you believe the space has bottomed out now that there is some hopes of credit demand which has got amped up?
In all probabilities, I think the worst is probably over. I think what had probably transpired with the interest rate cuts immediately gets reflected in terms of NIMs heading downwards. You've already seen significant CASA deterioration probably happen. But the bigger worry for the banking sector is deposit growth. With falling interest rates, how do deposits grow? And therefore, I think the entire perspective in terms of credit deposit ratios, advances growth can be significantly higher as we speak, as all these aspects, as I said earlier, can start coming through. But the bigger worry is deposit growth and how does the banking system probably balance that out. And therefore, you have to be a little bit more selective as far as the core banks are concerned. And therefore, our thesis is that NBFCs might be a tad bit better placed because they ultimately borrow from the banks with lower borrowing costs. Better rated NBFCs obviously have that advantage because of better credit ratings that they have at a lower rate is what they can borrow. And obviously, I think the pass-through element probably stays put with them. And therefore, I think the NIM spreads would largely have bottomed out for the system as a whole. With growth expected to come back, a lot of provisioning already there on the balance sheet, asset quality issues not very apparent. And therefore, I think core parameters indicating a recovery on the ROAs and the ROEs might actually mean that very, very selectively banks can do well. But NBFCs, in my opinion, because of these factors put together, can fare quite better.
Okay. But let's also understand the insurance space now that you have touched upon both the NBFCs and the banking space itself. We've seen good performance coming in from majority of the counters, be it your SBI Life or HDFC Life. But the GST benefit clarity is yet to come for the sector. But what are you watching out for insurance as a space?
Let's wait and watch because I think what has clearly transpired is with the cuts that have probably happened, policies will obviously become very, very reasonable as far as end customers are concerned. But for the insurance companies itself, I think the incremental benefits might not probably come through as one initially thought. And therefore, I think with costs remaining constant in terms of either marketing or commission costs that they have to probably pay out, unless they rationalize that aspect as well. How does that impact the overall premium growth as far as new policies are concerned is something to be watched out for. Again, I think with the new taxation rules that have probably happened and the new income tax regime that has got rolled out, how much does that incentivize a few of the salaried people specifically to probably invest in insurance products, which is a necessity, but how much does that give an incentive is something to be watched out for. And therefore, there is a lot of clarity that is still awaited. And therefore, I think we are adopting a wait and watch approach unless we have absolute clarity in terms of both the life as well as the non-life needs.
Okay. Mayuresh, you did mention that the consumption theme on the back of the GST rate cuts, we could see some benefits which could trickle in from the third and fourth quarter itself. So are you estimating, earlier the street was working with about double-digit earnings growth for the entire FY26, but have you changed any revisions that is to come yet because we still have some trade uncertainty which is yet to play out?
No change in estimates. And our take is that it will start playing out in Q3 because the cuts have happened a day before. And therefore, I think for the entire benefit to start flowing through their balance sheet, for them to rationalize the existing inventory as well, I think that might have some element of effect as we head into Q3. And therefore, I think no change in estimates. And our sense is, again, as I said, I think you might witness, along with festivities and all the factors put together, exponential growth can come through in Q3 and Q4.
Okay, so double-digit, 11 to 12% of earnings growth, that's what you're estimating?
Very, very much possible, Lovisha.
Okay. Now that we've discussed a whole host of sectors, anything that you're cautious in the market, any pockets that is making you quite nervous that still is supposed to be remaining on the sidelines at this point of time?
No, specifically, I think, as I said, one really needs to be a little bit more specific as far as the markets are concerned. The broader market specifically, I think, when you're talking about mid caps and small caps, I think that is where I think the incremental moves have happened quite substantially over the last few weeks. Valuations have probably gone tad bit higher than one's comfort level. And across sectors, I think the standard deviation compared to their own means have probably surpassed themselves. So I think once you watch out for these sectors, my own sense is that watch out where ratings rankings are very good and where the valuations are not very, very expensive, which is obviously mapped in Market Smith with late stage basis. So I think if that is the case, I think you probably need to be a little bit cautious. But I think selective sectors, as I said, including energy, I think might do phenomenally well. But you need to be very, very selective. I think you just can't go out there and buy anything.
Okay. All right, just one last question before we let you go, Mayuresh. If today somebody has, 10,000 rupees, how would you diversify, along? Because we've seen some traction coming in for gold and silver as well. And gold ETFs and silver ETFs have also taken quite a bit of traction. So how would you diversify between gold ETFs and silver ETFs versus equities?
Being an equity guy, I think I'll say I think a major component still goes to equity. But if you probably look at the basics of financial planning, I think you probably need to hedge yourself in. And I've always maintained my stance that a small allocation has to be there in gold and silver as well. Now, how much of that allocation depends on your risk reward. But ideally, I think a large component should probably be in equities. The hedging component is something that should go out in gold and silver. And obviously, you should cover yourself in terms of insurance as well. So I think those are the basics that you probably need to do. Within that large allocation of equities, if you're not an investor who is having a direct exposure to the market and you're going through the SIP or the mutual fund routes, diversifying there as well makes a lot of sense. You need to probably have at least three schemes, one large cap, one diversified between large cap and mid cap. And the third can be a choice that you probably do, whether it's ETFs for tax saving or otherwise. But my own sense is that you should spread yourself out, and gold and silver ETFs should form a small portion of your monthly SIPs that you probably do.
Okay, all right. All right, with that, we have to let you go, Mayuresh, but thank you so much for your time and connecting with us.
Always a pleasure, Lovisha. Thank you so much.
All right, let's take a quick check of the markets, how we are faring at this point of time. Both the benchmark indices continue to be in the negative territory. Sensex down about with over 150 points at this point of time, and Nifty is also below that 25,150 mark. If you look at the sectoral indices, Nifty Auto Index, definitely the top sectoral performer, 1% gains coming in there. Apart from that, majority, all of the sectors are green apart from the Nifty Auto Index. If you look at Nifty IT, 0.5% cut coming in there. Nifty Pharma with about 0.4% declines coming in there itself. Nifty PSU banks also seeing a decline of about 0.7%. And of course, if you look at Nifty consumer durables, also with a cut of about 0.7%. So Nifty Auto, that is the only thing that is holding up in a tepid market like this. And if you look at the broader end of the markets, both of them are in the negative territory itself. So all in all, it is the autos that we need to take home today on the back of the festive season, and that is what is riding the markets despite this tepid momentum today itself. But before that, let me introduce you once again to Money Control Super Pro, which can be your ultimate investment superpower. You can get all the live trading calls and investment ideas from SEBI registered experts, pre-identified chart patterns and AI-powered stock alerts right on your WhatsApp to help you trade and invest with confidence. So download the Money Control app and subscribe to Super Pro today itself to get all the alerts on your WhatsApp. All right, with that, we have come to an end of this edition of Opening Bell. Don't forget to tune in at 3 p.m. for closing, and we will understand how the market is developed with our experts and also discuss what stocks grabbed the headline. Until then, signing off.